I feel I'm like a little shaky, so I'm going to go eat after this. But if in this next topic, it looks like there is a growing auto loan problem. And this is what's been going on for the past couple of years now. And with this latest Fed hike, it's probably not going to get any better. And so we'll take a look at it. But if you're just joining in, my name is Dennis. I love talking about Tesla hacking, as I like to call it, but basically just getting the best on Tesla with the best financing rate. So definitely hit that subscribe if you're interested. And so let us take a look at this. This was a shout out to the Car Edge on YouTube. I was watching them and they posted this and I thought it was pretty interesting. So someone put this infographic together and it talks about the growing auto loan problem facing young Americans. And so what it's basically talking about is a lot of younger Americans throughout the past couple of years, they took out auto loans on vehicles and their percentage they were using a lot more of their income based upon, or they were taking an auto loan that was a higher percentage of their income. So you can see younger Americans borrowed more aggressively to purchase vehicles. You can see when the ages 18 to 29, 31% of them took out a more auto loan than what their actual income was. 1 in 5 Gen Zs say that their car payment account for more than 20% of their after-tax income. As you go higher, then of course, then it, I guess maybe they're more understandable and they won't take out a loan at more of their income, or maybe it's because their income goes a lot more higher. But you can see it goes from 29% from 30 to 39 ages, and then down to 23% of their income from 40 to 49. But of course, this is, there's two folds to this, right? Like dealers were marking up a lot of vehicles. I mean, Tesla also increased their prices throughout the past couple of years. And the third part of the problem is banks were also improving these loans across the board. Like we talked about 100 to 120% with the credit union, and it can even go 130, 140% of a loan value. And the only reason why it would go that high is because dealer markups and also the banks also approving that. So here's another infographic. At the same time, young Americans are falling further behind on their auto loans. And so it looks like the age group of 18 to 29 has the highest delinquency rate across all different auto loans. And so what that means is people aren't necessarily paying their vehicle loans, and it could be going into repo or things like that. And so what's the problem here? And how is this going to affect the future loan rates? Well, at the end of the day, banks are going to get a little bit more strict, a little bit more tighter. And that's probably why, as some of you are going through your auto loan application right now, they're probably asking the banks, the credit unions, and maybe even Tesla Financing are asking for more details from you. It's not just the days of just getting approved based upon your credit score and what you put as your income are probably long gone. They're going to ask for pay stubs. They're going to ask for W-2s. They're going to ask for maybe even potentially, employment letters. Like just think of like how strict it is on the mortgage side. The auto loan banks might start to tighten up as well. And now with the Fed increasing the interest rates another 0.25%, we're going to see ripple effects amongst the Tesla Financing and also credit union banks. And we're already starting to see this. We've been seeing this for the past few months. So this is a shout out. A tweet from Car Dealership Guy. As of this week, the auto used loan rate went up over 14%. Like that's insane for a used auto loan rate. And if you want to take a look at Edmunds, like interest rates have been going up for used and new vehicles across the board. We don't have March data yet because we're still in March, but the average new car rate for a new vehicle is almost 7% at 6.95%. So it's starting to trickle up a lot higher and higher. And so I saw this one tweet from Car Sales Guy on Twitter. This one blew my mind. 810 credit score, 2019 RAV4 with 19,000 miles. So a relatively decent vehicle, right? Like it's not a really old one. I mean, it's almost 5 years old, so that's kind of weird. But it only has 19,000 miles, so not bad at all. $10,000 down. So this is like, the bank should not be scared of this loan at all. 20,000 finance, 60 months, and the APR was 8.59%. Obviously, this customer didn't have access to any of the credit unions that that we have that of course have lower rates, but still really, really insane. Like I don't even want to calculate what that payment could be, but that most likely is like a $500, $600, maybe even $700 payment on a 2019 RAV4. But what's crazy here is that it was a 810 credit score. Of course, there's a one piece of the puzzle here that we're not seeing is potentially income, but at the end of the day, $10,000 down, that's still a strong amount of money down. So definitely some pretty interesting stuff. Let me know what your thoughts on it. And with the credit unions and the banks and how, the interest rates are steadily going to be going up. But we're going to go back into the live stream comments. But before we do that, this video is sponsored by my Patreon link. Down below in the description is a Patreon link where you can support the channel. And there's a variety of benefits, but some of them include actually scheduling a call with me, where you can ask me any questions about buying a Tesla, selling a Tesla, or even financing a Tesla. And after you join the Patreon, you get a link to my buying guide, which has links to all the credit unions and banks that I have access to that all have interest rates lower than Tesla financing. So definitely check it out if you're interested.